Welcome to my channel, CA Academy, and today we are going to deal with a very important topic, that is pervasiveness in audit report. In CA Final, pervasiveness is tested mainly in context of modified opinions under SA 705. Let's understand in a simple way. Where does pervasiveness come into picture? When the auditor concludes that there is a material misstatement or there is an inability to obtain sufficient appropriate audit evidence, then the auditor decides whether to issue a qualified opinion, adverse opinion, or disclaimer of opinion. The key deciding factor whether the matter is pervasive or not. As per SA 705 ICAI definition, pervasive effects are those that, in the auditor's judgment, are not confined to specific elements, accounts, or items, or if confined, represent or could represent a substantial portion of the financial statements or relate to fundamental disclosures affecting users' understanding. Important to remember, pervasive does not mean all items. Pervasive means widespread plus fundamental impact. Now we have to learn the decision matrix. For a particular situation, if material yes, pervasive no, then the opinion will be qualified. Similarly, if the situation is material yes, pervasive yes, then the auditor will give an adverse opinion. In a similar way, scope limitation. For scope limitation, is it material? Yes. Is it pervasive? No, then qualified opinion. Again, for scope limitation, is it pervasive? Yes. Material? Yes. Then disclaimer of opinion. Just remember this decision matrix. This will help you in forming which type of opinion the auditor will give. Okay. Understand with case study. Case study 1, inventory overvaluation, not pervasive. Inventory is overstated by rupees 5 crores. Inventory forms 15% of total assets. Material? Yes. Confined to one area? Yes. Affects entire financial statements? No. So the auditor will give a qualified opinion. Similarly, case 2, revenue recognition, wrong, pervasive. Company recognized fictitious revenue of rupees 50 crores. Revenue affects profit, debtors, tax, earning per share, reserves. Is it material? Yes. Affects multiple areas? Yes. So distorts to performance? Yes. The opinion will be adverse opinion. Okay. Because revenue is a fundamental element. Third case, auditor not allowed to verify inventory year-end. Management restricts physical verification. Okay. In this case, inventory is equal to 60% of the total assets. Material? Yes. Pervasive? Yes. Huge portion of the assets is inventory. Then evidence not obtained. At this situation, the auditor will give a disclaimer of opinion. So when you're going to attempt any question in the examinations, first you have to see whether the step 1 will be, you have to give the state relevant essay, that is as per essay 705. Then what we have to see, whether the particular event or situation is material, whether it is pervasive. If it is material pervasive, depending on the decision matrix, give the opinion. Okay. And then write in the conclusion, since the matter is material but not pervasive, the auditor should issue a qualified opinion. In a similar way, if the matter is material as well as pervasive, you will have to write, since the effects are material and pervasive, the auditor should express an adverse opinion. Thank you.